Good afternoon. Thank you, AJ, and thank you all for joining us today, Election Day, for our third quarter 2024 earnings call. Third quarter net sales of $461.1 million and adjusted EBITDA of $70.4 million were somewhat below expectations. Excluding Crisco, whose net sales were negatively impacted by lower net pricing to reflect a decrease in soybean oil costs, base business net sales decreased by approximately 3% compared to the year-ago period. Some of the key factors impacting third quarter sales trends. First, base business trends on most of the B&G Foods portfolio have been slower to recover than expected, consistent with the center store packaged foods industry. We have not seen much improvement relative to the first half, with consumers adjusting their purchasing patterns in the wake of high food inflation. The exception has been our spices and flavor solutions business that has shown positive trends, plus 2.6% in Q3, with the growth of fresh produce and proteins in the perimeter of the store, driven by a narrowing of the relative pricing of fresh to frozen and packaged foods in the last year. During Q3, and particularly in the July period, major retail customers lowered their warehouse and shelf inventories across our categories by several days to a week. We estimate that impact was 1% lower net sales in the quarter. Food service sales, roughly 15% of total B&G Foods, have continued to be down 2 to 3%, but generally reflect overall restaurant industry traffic patterns. We have experienced some increased competitive activity in a few categories. In vegetable oil, Wesson has priced aggressively over the last several months to protect, and in some cases, rebuild distribution. In the Mexican category, Ortega, as well as the Old El Paso brand, have been impacted by increased activity from the Taco Bell brand. For the third quarter, adjusted EBITDA of $70.4 million decreased by $10 million compared to the third quarter of 2023. The Green Giant U.S. shelf-stable divestiture represented approximately $2 million of the year-over-year decline, with foreign exchange from Mexico operations on the Green Giant frozen business representing roughly another $1.5 million. Foreign exchange from the peso has been a drag on costs and profits, depressing Green Giant segment adjusted EBITDA by $5 to $6 million year to date. Total B&G Foods adjusted EBITDA as a percentage of net sales for the third quarter was 15.3%, down from the prior year period. During Q3, we continued to see only isolated inflation in some categories, e.g. pepper, garlic, etc., and some modest favorability in transportation and warehousing costs versus last year. In terms of outlook, we are revising guidance to reflect the reality of a slower recovery in center store trends and the consumer environment. Bruce will cover more detailed guidance for the fiscal year 2024. Moving forward, we expect to see gradual recovery and stabilization in fiscal year 2025, with sequential improvement between the first and second halves of the year. Segment reporting. B&G Foods continues to report results by operating segments, providing greater visibility into the performance of the company's 4 operating business units. Bruce will provide more detail, but I will touch on a few top lines across the segments. Spices and Flavor Solutions. Third quarter net sales increased 2.6% versus the third quarter of fiscal year 23, aided by the growth of the fresh fruit perimeter in grocery. This segment represents B&G Foods' highest segment adjusted EBITDA as a percentage of net sales. Segment adjusted EBITDA was down modestly behind the timing of some food service trade spend, increases in certain raw material costs, and product mix. We also launched a new line of licensed seasoning and grilling blends under the 4 Sixes brand, the ranch featured in the Yellowstone television franchise. Meals. The Meals segment Q3 net sales decreased by 3.9% versus last year. The largest driver was the Ortega brand, impacted by competitive pressure from increased activity by the Taco Bell brand, although we have a strong pipeline of channel and product innovation coming. Skinny Girl salad dressings continued high growth behind new items, increased capacity, and expanded distribution. Specialty. The Specialty segment Q3 net sales declined by 9.9% versus last year. The Crisco brand was down behind lower soybean oil pricing versus last year, reflected through to customers in our pricing model. We also experienced some delays in getting lower pricing reflected in some customers, which has been rectified. Weston also fielded more aggressive pricing and promotion during the quarter. Specialty segment adjusted EBITDA was down less than net sales, 6.2%, due to lower soybean oil costs. Frozen and vegetables. The frozen and vegetables business unit net sales, excluding the impact of the U.S. Green Giant can divestiture, were down 1.7% versus last year, an improvement from prior quarter trends and reflecting some overall category softness in frozen vegetables. Excluding the divested Green Giant U.S. shelf-stable business and the impact of foreign exchange from the peso, segment adjusted EBITDA for frozen and vegetables was positive for the quarter. This fall, we have launched a strong innovation pipeline, including a number of premium sides. Portfolio shaping. B&G Foods remains committed to reshaping and restructuring our portfolio to sharpen focus, improve margins and cash flow, and maximize future value creation. This is a high priority for the company and critical to our future strategic direction and risk profile. The divestiture of the Green Giant U.S. canned vegetable business was completed last fall, following the sale of the Back to Nature brand in January 2023. We continue to review our remaining portfolio for possible divestiture of non-core assets, including the possible divestiture and sale of some or all of the assets in the frozen and vegetables business unit. Green Giant remains a strong brand with broad awareness and distribution, and the frozen vegetable category is on trend with health and dietary trends. However, it may not be the right fit with B&G Foods' focus and capabilities, particularly since there are no plans to add more assets in the frozen portfolio, given the opportunities in our core shelf-stable businesses and overall capital constraints. In anticipation of questions we often receive during the Q&A portion of these earnings calls, I remind you that our company policy is to not comment on any specific acquisition or divestiture opportunities unless and until we reach an agreement with a counterparty. As such, other than the general statements we have made regarding the review of possible divestitures and our commitment to reshape and restructure our portfolio, we will not have further comment at this time regarding specific divestiture opportunities or possible timing. Thank you, and I will now turn the call over to Bruce for more detail on the quarterly performance and outlook for the remainder of the year.
Thank you, Casey. Good afternoon, everyone. Thank you for joining us today. We will try to be efficient with everyone's time so that you can all get out to vote this evening if you haven't done so already. I will start with a quick housekeeping item. Last year's third quarter results included the Green Giant U.S. shelf-stable product line, which we sold to Seneca last November. Green Giant U.S. shelf-stable contributed approximately $20.3 million of net sales in contribution to last year's third quarter results. In the third quarter of 2024, we generated $461.1 million in net sales, $70.4 million in adjusted EBITDA. Adjusted EBITDA as a percentage of net sales, 18.3%, and 13 cents in adjusted diluted earnings per share. Base business net sales, which exclude the Green Giant U.S. shelf-stable product line, decreased by $21.3 million, or 4.4%, in the third quarter of 2024 compared to the third quarter of 2023. The decline in base business net sales is comparable to our consumption data, as per Nielsen, which showed a decline of approximately 5% for the 13 weeks ended September 28, 2024. $22.6 million of the decline in base business net sales, or 4.7 percentage points of the decline, was driven by lower volumes, and $0.4 million, or 0.1 percentage points, were driven by the negative impact of foreign currency. These impacts were offset in part by the benefit of $1.7 million, or 0.4 percentage points, of positive net price and product mix. Net sales for our Crisco brand decreased by $9.4 million for the third quarter of 2024 as compared to the third quarter of 2023, largely as a result of our commodity pricing model for the brand, which resulted in a net pricing decline of approximately $3.5 million to reflect lower soybean oil commodity costs, coupled with a decrease in volume of approximately $5.9 million. Excluding the Crisco brand, base business net sales decreased by $11.9 million, or 3%, in the third quarter of 2024 compared to the third quarter of 2023. Gross profit was $102.3 million for the third quarter of 2024, or 22.2% of net sales. Adjusted gross profit, which excludes the negative impact of $0.1 million of acquisition divestiture-related expenses and non-recurring expenses included in cost of goods sold during the third quarter of 2024, was $102.4 million, or 22.2% of net sales. Gross profit was $113.8 million for the third quarter of 2023, or 22.6% of net sales. Adjusted gross profit, which excludes the negative impact of $0.3 million of acquisition divestiture-related expenses and non-recurring expenses included in the cost of goods sold during the third quarter of 2023, was $114.1 million, or 22.7% of net sales. While we are continuing to see input cost inflation with regards to raw material costs across our basket of inputs and in our factories, the cost increases have continued to be mostly modest thus far this year. However, we are still seeing elevated costs in some categories such as black pepper, garlic, olive oil, and tomatoes. And foreign currency is negatively impacting our costs at our Green Giant manufacturing facility in Mexico. Helping to mitigate those cost increases are continued favorability in some areas that saw the most extreme input cost inflation in 2022 and 2023, such as soybean oil, cans, and logistics, as well as through our continuous improvement productivity efforts and cost savings initiatives in our factories. Selling, general, and administrative expenses decreased by $2.2 million, or 4.6%, to $46 million for the third quarter of 2024, from $48.2 million for the third quarter of 2023. The decrease was composed of decreases in consumer marketing expenses of $1.2 million, warehouses expenses of $0.9 million, selling expenses of $0.8 million, and acquisition divestiture-related and non-recurring expenses of $0.6 million, partially offset by an increase in general and administrative costs of $1.3 million. Expressed as a percentage of net sales, selling, general, and administrative expenses increased by approximately 40 basis points to 10% for the third quarter of 2024 as compared to 9.6% for the third quarter of 2023. As I mentioned earlier, we generated approximately $70.4 million of adjusted EBITDA, or 15.3% of net sales in the third quarter of 2024, compared to $80.4 million, or 16%, in the third quarter of 2023. Approximately $2 million of the decrease in adjusted EBITDA for the quarter was the result of the divestiture of the Green Giant U.S. shelf-stable product line, which we sold last fall. An additional $1.5 million or so of the adjusted EBITDA decline resulted from the negative impact of foreign currency relative to the impact in the year-ago period on our cost of goods sold for the portion of our Green Giant frozen vegetables that are produced in our manufacturing facility in Mexico. The remainder of the decline was largely driven by the decline in our net sales and a modest increase in our raw material costs. Net interest expense was $42.2 million in the third quarter of 2024, compared to $35.9 million in the third quarter of 2023. The increase was primarily driven by approximately $3.1 million of charges related to our recent financing, as well as the impact of higher interest rates on our long-term debt during the third quarter of 2024 compared to the third quarter of 2023. These increases were offset in part due to lower average debt outstanding in the quarter relative to the prior year quarter. Depreciation and amortization was $17.2 million in the quarter of 2024, which is in line with the $17.3 million in the third quarter of last year. We had net income of $7.5 million, or 9 cents per diluted share, and adjusted net income of $10.1 million, or 13 cents per diluted share in the third quarter of 2024. In the third quarter of 2023, we had a net loss of $82.7 million, or $1.11 per diluted share, and adjusted net income of $20.5 million, or 27 cents per adjusted diluted share. Adjustments to our EBITDA and our net income are described further in our earnings release. I would now like to touch on the results by business unit. Net sales for specialty decreased by $17.7 million, or 9.9%, in the third quarter of 2024 to $161 million from $178.7 million in the third quarter of 2023. The decrease was primarily due to lower Crisco pricing, driven by decreased commodity costs, coupled with modest declines in volumes across the business unit in the aggregate. Specialty segment adjusted EBITDA decreased by $2.7 million, or 6.2%, in the third quarter of 2024 compared to the third quarter of 2023. Net sales for meals decreased by $4.5 million, or 3.9%, in the third quarter of 2024 to $111.6 million from $116.1 million for the third quarter of 2023. The decrease was primarily due to lower volumes across the business unit, partially offset by a modest increase in net pricing and product mix. Meal segment adjusted EBITDA decreased by $2.4 million, or 9.5%, compared to the third quarter of 2023. Frozen and vegetable net sales, excluding the impact of the Green Giant U.S. shelf-stable product line divestiture, were down by $1.6 million, or 1.7%, versus the prior year. Segment adjusted EBITDA decreased by $3.2 million compared to the third quarter of 2023. Approximately $2 million of the decline was due to the divestiture of the Green Giant U.S. shelf-stable product line, and an additional $1.5 million or so from the negative impact of foreign currency relative to the prior year period on our cost of goods sold for the portion of our Green Giant frozen vegetable products produced at our manufacturing facility in Mexico. Excluding these amounts, segment adjusted EBITDA increased marginally in the third quarter as compared to the prior year. Net sales for spices and flavor solutions increased by $2.5 million, or 2.6%, in the third quarter of 2024 to $99.3 million from $96.8 million in the third quarter of 2023. The increase was primarily due to higher volumes across the business unit. Spices and flavor solutions segment adjusted EBITDA decreased by $1.6 million, or 5.2%, in the third quarter of 2024 compared to the third quarter of 2023. The decrease in segment adjusted EBITDA was largely driven by a combination of an increase in trade spending and product mix, and in increases in raw material costs such as black pepper and garlic. Now, moving on to our balance sheet. As you likely saw, we continue to update our balance sheet. Following the refinancing of our revolver, our Term Loan B, and an add-on senior secured note offering this summer, in October 2024, shortly after the end of the third quarter, we then redeemed the remaining $265 million of senior notes due April 2025. Following these moves, we no longer have any near-term maturities, with our closest maturity being our senior notes due 2027. Additionally, we now have just over 35% of our long-term debt tied to floating rates, or SOFR. A 50 basis point decrease in rates would reduce our interest expense by approximately $3.5 to $4 million on an annualized rate. Similarly, a 100 basis point reduction would be expected to reduce our interest expense by $7 to $8 million. Further details regarding the refinancing transactions have previously been disclosed by press release and 8-K filings and are described in the footnotes to the financial statements that we filed earlier today as part of our 10-Q. And finally, as noted in our earnings press release, we are revising our fiscal 2024 guidance to $1.92 billion to $1.95 billion for net sales, $295 to $305 million for adjusted EBITDA, and 67 cents to 77 cents for adjusted diluted earnings per share. At the midpoint, our net sales guidance is based on our first three quarters of 2024 net sales of approximately $1.381 billion and projected base business net sales decline of approximately 2 to 3% for the final quarter of 2024, which is a similar trend to what we saw in the third quarter. We believe that the revised guidance better reflects the continued industry-wide challenges in consumer activity, which has dampened volumes in both retail consumption and food service channels. As a reminder, the Green Giant U.S. shelf-stable business line that we sold last year contributed approximately $15.9 million in net sales to last year's fourth quarter. Additionally, we expect for full year 2024 interest expense of $152.5 million to $157.5 million, including cash interest expense of $145.5 million to $150.5 million. Depreciation expense of $47.5 to $52.5 million. Amortization expense of $20 to $22 million. An effective tax rate of 26 to 27%, and CapEx of $30 to $35 million. And while we are not providing guidance for fiscal 2025 at this point, we do expect trends to gradually improve and stabilize in the first half of 2025 as we lap the consumer reaction to higher prices. Now I will turn the call back over to Casey for further remarks.
Thank you, Bruce. In closing, B&G Foods is laser-focused on the few critical priorities. First, improving the base business net sales trends of the core business to the long-term objective of plus 1 to 2%. Two, reshaping the portfolio for future growth, stability, higher margins, and cash flow, as well as structuring key platforms for future acquisition growth. Third, reducing leverage below 5.5 times through divestitures and excess cash flow to facilitate strategic acquisitions in the future.